Don't you dare call it an algorithmic stablecoin. The newest stablecoin from Cardano is trying its very best to put as many levels of separation between its newest stablecoin, Djed, and the catastrophic algorithmic stablecoin called UST. Now, Djed, don't get it wrong, it is an algorithmic stablecoin. It is a decentralized stablecoin. It doesn't use a bank. It doesn't use either physical cash or treasury notes to back up its stability. No, Djed is an algorithmic stablecoin. And how different is it actually from UST? That's what we're talking about in today's video. If you want to know my thoughts and opinions on this, please continue to watch. If you enjoy these updates, I appreciate it if you hit the like button and hit subscribe. Also, if you want even more information, you have to check out the CT Club. A link for it is down below in the video description. Go ahead and click on that link and you'll see everything that we provide in that membership. If you're interested, you can join. So Djed is brought to us by Cardano just a few days ago. So finally, Cardano is actually putting something out there, putting a product out there for people to use. I know you big Cardano fans are going to let me know in the comments everything else that Cardano has released in the past years. Don't get me wrong. We've invested in Cardano since 2017. We have taken plenty of profits. We have reinvested those profits, exited our positions in Cardano several times. So regardless, for those of you who are super fans of Cardano, you might not like this video because, believe it or not, this is what a non-echo chamber sounds like. This is what critiques sound like. And I welcome you to think critically over this project, for the good or the bad. It's good to have a well-rounded perspective, and that's basically what I'm trying to bring here. Now, that being said, these are my first initial thoughts of Djed. It has not been existing or made public for very long whatsoever, so no one is an expert in how this actually works and what the future of it actually will be. It is a very new project, but here are my concerns. Number one, they're saying it's not an algorithmic stablecoin. It is an over-collateralized stablecoin. That's kind of a half-truth because it is an algorithmic stablecoin and it's also over-collateralized. They just, again, want to separate their similarities between UST as much as possible for marketing-wise, when in reality, it's probably a lot more similar than they would like to think. And that, I think, is in part to how Cardano and how code on Cardano is able to be published. It has to go through a rigorous peer review system. And UST had a huge popularity when it was going good. And a lot of projects try to hop on that bandwagon. Near, Phantom, Tron, they all were basically doing the same exact thing as Luna and UST. And here is the main crux, the main concern that I have personally of any decentralized algorithmic stablecoin is that, I don't know if you know this or not, guys, but cryptocurrencies are an experiment. This is the first time currency and money and value is created without the control of a government. That in itself is a huge experiment. So when you have an already relatively well-functioning blockchain with its own native token, trucking along, doing great, and then they get this great idea to also create a stable coin. And here is when the problem hits, is when they're using their own native token to achieve the stability of their stable coin. Here's the level of risk of that blockchain in itself. And then here's the experiment on an experiment of the stable coin. If that stable coin fails, because they have directly tied their native coin to that stable coin, and a death spiral ensues. Just take a look at what happened with UST and Luna. And that's about all I have to say. The defense here against, of course, with Djed is that they're over-collateralized by like between 400 and 800%. That is a much larger cushion to kind of prevent or protect against a death spiral as best as they can. That is a huge number compared to what we were looking at in the past. Is it a perfect solution? Is it a guarantee? Do not be fooled into any guarantees in crypto ever, because you can't ignore the red flags, especially some of the things I'm reading in the documentation about Djed. The main concern, of course, is although it is 400 to 800% over collateralized right now, and it is a new project and they are looking to expand, but right now the vast majority of that collateral is in the form of Cardano, of ADA. I'd be curious to see how they incentivize other coins to be used as collateral. They're talking about using wrapped Bitcoin or wrapped Ethereum on the Cardano blockchain to be used as collateral as well. Will they be using some kind of a lending platform to incentivize this? Right now, the incentive for anyone to post collateral to mint Djed is paid in the transaction fees. So there's that. It's a little bit more of an intrinsic system than just like UST, where they had pre-mined coins just to be paid out to people to mint UST. And then once that trickled down and eventually ran out, they had to reduce that 20% APY on Anchor Protocol. Once that number dropped, it became far less appealing for people to do that, and they began withdrawing, and then a death spiral ensued. So is 400 and 800% good enough? Well, the good thing about Djed, at least in the very short term, is that this is released at the tail end of a bear market, before a bull run, not at the beginning of a bear market. So basically, the potential for new investors to enter Djed is much higher now than it would be, let's say, if it was like in the absolute FOMO phase of the bull market. So it has that going for it. But when or if the faith was ever questioned or lost for Djed, is 400 to 800% collateral enough to give you enough exit liquidity to exit your position without it crashing? Because although it's a very similar algorithm to its stability as Luna and UST, and that back in the day, in that, for example, you could always buy $1 worth of Luna for 1 UST and vice versa. But when the people really started panicking and a lot of people wanted to exit their position of both of UST and Luna, basically they were using that mechanism, their system was overloaded and people couldn't get their transactions through while they were watching their both coins just absolutely tank. And just, it was really unfortunate. So many people lost so much of their value because of this failed system. What other mechanisms are they going to use to incentivize people to mint Djed and to put up post collateral? I know they're using transaction fees, but is there going to be any other dApps on there trying to bolster that and offer some kind of additional APY to lure people in? Again, that would be a huge red flag, by the way. Not to mention the fact that the downfall of UST has without a doubt spurred a huge amount of interest in terms of regulations from countries around the world who are pretty fuzzy on exactly how they're going to regulate crypto. But the one thing that they are consistently very specific on is stable coins, because stable coins represent probably the most threat to them, because they're trying to emulate fiat on the blockchain. Basically, they let you leverage the relative stability of fiat currency, but you can keep it on your own wallet, or you can lend it on a DeFi or what have you, make transactions very easily, kind of emulating a CBDC, a free CBDC, if you will. But how can Cardano battle that if they're going to be up against regulations, if they're going to be snuffed out? Charles Hoskinson is a very public figure, the head of Cardano, and are they really as decentralized and robust against governments and regulations as they might claim to be? That might be the test of 2023, 2024 for Cardano. So again, this is just a general overview of my first thoughts of this new stablecoin. Call me skeptical. That's great. I think we all should be. And if this is a good stablecoin, it'll stand the test of time. It should rise up to the challenge of a heavily skeptical crowd of investors. This is, by the way, the growing pains of self-regulation, of people who have learned their lessons, have become smarter investors, hopefully, through these experiences, and they demand better. They demand more from those who are trying to create solutions. This is where it starts. This is how it goes. You have a responsibility as an investor, actually, and a user of cryptocurrencies, of how this space progresses, how it evolves. What are you willing to settle for? Are you going to fall for it again? Are you going to demand something better? I wanted to say this also. Decentralized exchanges used to be a huge headache. No liquidity at all. There was it just seemed like they would never really take off or be a real solution for people outside of the real diehard cypherpunks or the people very, very cautious of their privacy online. And then Uniswap and all these other decentralized exchanges with their liquidity pools, there was a solution that really happened to bring liquidity to decentralized exchanges and make them much more user-friendly and just an overall better experience. I think that will happen with stablecoins. Is Djed that solution? I don't know. That's yet to be seen. But looking forward to seeing how this one develops. But I wanted to let you guys know my concerns and what I'm looking for, because no one wants to get burned twice, right? Once bitten, twice shy. That's going to be, I think, should be the motto for any new stablecoin out there. Anyway, thank you for tuning in, and we'll see how this one progresses. But if you don't mind, I appreciate it. Hit like and subscribe. See you tomorrow.